As a trader, do I really need to follow these things?
Yes, absolutely. For the whole week, they
Yeah.
opened with a gap down on the Dow Jones, SP 500, Nasdaq.
Yeah.
We get to Wednesday evening, Trump starts talking, starts mentioning some positive stuff. Immediately, all these indices start going up. Are you telling me you don't need to follow this guy?
Do you think we will see perhaps a weaker dollar this year?
Yields have been rising consistently, and now we are just in the first month of the year.
Yes.
And the yields are still rising.
Yeah.
So this basically tells you that a lot of investors are dumping American bonds. So the sell America trade is still on.
Hello traders, I hope you're having a wonderful day wherever you are. I'm your host Jesse for yet another episode of Bullish Banter. How are you doing, Rufus?
I'm doing well.
Yes. Anything interesting happening today?
Davos. I think today being day 4 of the World Economic Forum in Davos. From the fireworks we got yesterday, I think even today we might be expecting something.
Okay. We are recording this on 22nd of January. It's important because some of the events that are happening might probably shape how the markets proceed from here. And Davos is an annual economic forum. Davos is a place, first of all. The World Economic Forum meets there every year. And top leaders, including Trump and central bankers, give speeches and what they view of the market. So if you have never, or you are not able to get a chance, hopefully we'll try to break it down a bit in a way that as you trade, you're able to learn something. When you say fireworks, I saw the speech. And there was the other speech of, is it Hassett? Jason Wang. Yeah. But two or three speeches actually interested me, or panel.
Yeah.
When the ECB chair walked out after one of those Trump guys spoke badly about ECB policy, and then when they were updating the media on, the issue of Greenland, and the Treasury Secretary was saying, "Don't worry, things will be okay." Like last year when we had the tariff talk, and then Trump came in. I want to believe, I have a theory or a conspiracy theory.
Yeah.
When he was supposed to leave New York, Washington, and then the flight went back, and the speeches which had been issued, including Macron in sunglasses, I think he changed the speech to be more palatable.
Yeah.
What do you think about that?
Well, I think it changed with the conversation with the NATO leadership.
Yeah.
The guy at the head of NATO came up with a different plan on how the US would secure its interest without not necessarily having to take Greenland.
Okay.
Yeah. I think that's where everything changed.
Do you think really they need Greenland, or it's just politics as usual?
Well, I believe it's something to do with global shipping routes.
Yeah.
Yeah. So Greenland is becoming one of the key pathways for shipping.
And how does that affect him? I mean, he wanted Canada, now he wants Greenland, now he wants Venezuela.
Well, he always gets away with it. Like how in Blacklist, Reddington would get you a particular criminal.
Yeah.
But when you analyze the entire episode, there's a certain benefit for Reddington himself.
Yeah.
I think it's a similar thing. So when he wants something, he doesn't say what he really wants. So he makes like very bold claims and then ends up winning something.
Yeah, but we know Trump to be straightforward.
Yeah.
Like, for example, Venezuela, it was very clear they want their oil and their resources.
Yes.
And when they spoke to the oil industries, major players in the industry, they were very categorical that mining oil in Venezuela is expensive for them. Yeah. And even I think it was, I've forgotten the name of the company. He was very categorical that if they need security organization, that the political organization will be okay.
Yeah.
Greenland, they have said they need it for security reasons.
Yeah.
That is what they are going through with.
Well, but what they leaked yesterday, they said that part of the negotiations was the rare earth minerals. Yeah, they are willing to do a deal with Greenland where they take their rare earth minerals.
Okay, now that is fair. As a trader, do I really need to follow these things?
Yes, absolutely.
Because every day there's a new political angle, and I cannot be sitting down every time watching at news and CNN and BBC and reading the Trumps and trying to figure out if the speech is hawkish or bearish or dovish.
Let's take it back a notch. March 2025.
Uh-huh.
So Trump is all out saying that he's going to implement tariffs on everyone.
Mm-hmm.
Everyone is going to pay some tariffs to the US, and they're going to fix the trade deficit.
Yeah.
So he announces a big day, April 2, Liberation Day tariffs. What happened within that month? In March, everything went down.
Yeah.
So whether you are following
Except
the
gold.
economic calendar, except gold.
Yeah.
Whether you are following the economic calendar, whether you are following your technicals, whatever Trump was saying was directly influencing the markets. Prices were going down. So immediately after implementing the April 2 tariffs, where he decided to set tariffs on each and every country doing business with the US, including Madagascar, I remember they were getting, I believe it was around that 5%.
Yes.
So a few days later, he chickens out. He pulls out of the deal. He says, push these things to July. And then we have a new deadline.
Okay.
So when he did that, the markets started recovering immediately. So if you're not following Trump, then things might be happening on your chart and you're wondering, why is this not happening? But in real sense, he's directly impacting the markets.
Don't you think maybe sometimes if you look at the chart, let's say on gold on H1, the price action is more superior? Like if you get a double top, a bearish engulfing candlestick, something like that, usually a continuation of that trend, as technical analysis suggests, would be followed, even though whatever he says,
Well, for the whole week since Monday, we opened with a gap down on the Dow Jones, SP 500, Nasdaq.
Yes.
On the European side, the DAX 40, the Eurostoxx 50. So the IBEX also had a gap. Like all these stock market indices were having a gap at the open on Monday. Then the same day, they keep going down, no covering the gap. Fast forward Tuesday, they keep going down. Wednesday, they keep going down. We get to Wednesday evening, during the speech at Davos. Immediately Trump starts talking. He starts mentioning some positive stuff. I remember he said yesterday that the drop in the stock market is just peanuts. We expect the stock market to double this year. Then guess what? Immediately, the Nasdaq is up 2%, SP 500 up, like all these indices start going up. Silver and gold, which had hit a new all-time high on the same day, they start reversing on the same day. And are you telling me you don't need to follow this guy?
No, I'm saying that because, for example, last 3 weeks, we have seen gap ups on Monday after a crazy weekend, right? And I know at some point, even the market gets tired or exhausted. The momentum gets exhausted, or traders basically cash out their profit. And you are busy. You are not somebody who is in the charts like us almost every day. Somebody maybe is a doctor, military, driving something. You are in school. You cannot be all, checking the news and trading. How would you recommend such a person plan themselves so that, or get the news in time, and therefore when you're managing your position, you are not worried about every time having CNN playing on the background?
Well, if you can follow EPL, if you can follow the FPL and manage a team for a whole year, I think it doesn't take much work to follow just one guy. That's just Trump. Maybe get on Truth Socials, get notifications on, and it doesn't mean that you like constantly follow like what he's doing. But whenever there's an announcement, there's a tweet, there's an update or a meeting or a speech to be presented, just know that there's a higher, I would say a higher chance, or more. It's more than likely that whatever he says will eventually move the markets, which will most likely affect your bottom line if you have a trade or an investment.
Today we have just gotten positive GDP. I think it's around 4.4%. So I guess Trump is doing that something right. And next week, by the time this episode is out, perhaps we already have had the first FOMC decision this year. And the BOJ is hiking their rates, while, of course, Trump is pushing Fed to lower their rates. Do you think we will see perhaps a weaker dollar this year? Last year it was weak, but given the science and everything going on around, and there is, I would say, limited interest in U.S. treasuries, are we likely to see, with lower rates, lower interest in foreign buying U.S. treasuries, perhaps weaker dollar?
Well, from what I'm seeing, especially in the bonds markets, yields have been rising consistently throughout last year. And now we are just in the first month of the year.
Yes.
And the yields are still rising. So this basically tells you that a lot of investors are dumping American bonds. So the sell America trade is still on. So while people are not selling like the top performing stocks like Nvidia and stuff, on the bonds they are dumping, on the dollar they're also dumping.
Do you believe the sell America agenda because they still have the strongest economy, given the numbers that we have seen today? The stock performance, most of the companies forming S&P 500 and even Nasdaq itself are performing well. If you look at Q4 last year performance, they're performing well. Do you think it's more or less emotional, or they call it activism investing, or it's actually de-risking from, Trump changing his mind, attacking you with tariffs and all this stuff?
Well, I think it's more along the lines of de-risking. The US national debt has gone too high. Now that is higher than their defense spending, and it's about to overtake social security spending. It basically means that the US is in debt trouble. It's only that Moody's haven't updated their list. By the time they update and show the expenditure versus the revenue the government is making, at some point that will be a very strong conversation.
So that should drop early February or March. Normally it's March,
So usually for a lot of bond buyers, for countries it's reasonable because they use it for their, I would say, for their fiscal monetary policies. Like how Japan would eventually sell some dollars to balance the value of the JPY. But then for private institutions like hedge funds, investment banks, when you look at their purchases and the trends they are taking right now, would you go for a US government bond that will get you locked for 10 years? Let's say it's giving you 3-4%. Compare that with another investor who is just holding gold, and last year they were just up 60%.
80%,
So yes, gold doesn't give you yield, but at the same time, the performance is way higher. So given the fundamentals we are seeing in gold and silver, where demand is only increasing and supply is not adjusting at the same rate, which is basically leading to the current bull run. And I don't believe the bull run started last year. It has been there for the last 3 years.
3 years, since Russia, Ukraine. And I think when the Fed started hinting at cutting rates.
Also the Israel-Palestine.
Now, good that you've mentioned gold as we transition to metals. Gold is up this year, 12%, at least up to date, despite it correcting. And the higher it goes, of course, the higher the margin requirement for any trader. It will cost you more to open a smaller position. Which other currencies do you think would benefit from such a global uncertainty that may perhaps offers lower cost of entry, but good, I would say, output in terms of your returns? Which currency pair would you say would be an alternative to gold?
Well, I don't know. Gold is still superior.
I mean,
in very many ways.
You out to a cabbage FX.
Well, looking at the currencies right now, one of the cheapest currencies is the yen. Long term, it has been weakening. The Swiss franc was like the top performer last year, gaining against the dollar by about 14%. And the Swiss National Bank doesn't like that when their currency becomes too strong. So they might even dive deeper into the negative territory because their interest rates are already at zero. So if they dive deeper into the negative territory, that could provide a balance. And maybe if you're looking into trading currencies, you might consider trading the Swiss franc against other currencies. Because it has that level of stability. Now,
gold, we are at 12% up. I think last week, for those who listened to Dominic, he had some things to say about gold. Right now, we are just hovering around 4,800, and everything coming and everything that is happening. I think this week we have just gained almost $200 an ounce. Are we looking at a situation whereby we will be at around maybe 8,000 if this situation continues, or compared to the previous years, gold would have a steady appreciation, 20%, 30%. Are we looking at that, or an explosive 80% and above this year?
Well, normally, if you are, let's say, financial markets broker, through regulation, you're supposed to advise your clients that past performance doesn't imply future performance, right? But in reality, past performance almost more than likely predicts future performance.
Yes.
So what you've been doing, observing in the gold market is a trend where more and more central banks are going for even more and more gold purchases.
Yeah.
So this is turning to be, I would say, a race among central banks on who can buy as much gold and perhaps even control the gold market.
Yes.
We already saw the shift happening with silver. So by December, there was a shortage of silver in the market.
Yeah.
The Shanghai
Index.
No, the Shanghai market.
Okay. Gold market, yeah.
No, for silver. They basically held more silver that is deliverable compared to the US.
Okay.
So eventually, they were forced even to loan London when London could not meet the deliverables for silver.
Yeah.
So eventually, the Chinese have taken control of the market of silver.
Do you think it's more or less fundamentally driven or it's greed? Because as a trader, I will look at, okay, silver is doing what, 120%. And every day, given the PIP value of silver is a bit higher, I might make more from the same PIP movement as the same as gold, even though it may cost me a lot. And then now there is, of course, platinum is gaining. There is the cross pairs of gold, gold JPY, gold AED, gold euro, gold pound. Is it driven by greed by people, or it's more or less fundamentally and, there's something that drives that demand?
So for gold, I think it's central bank driven.
Yeah.
So as more and more central banks keep buying more gold, that is driving the direction for the price of gold.
Yeah.
Silver, on the other hand, is more of a product rather than a safe haven play or a value play.
Yeah.
So if you look at who has the manufacturing companies that need silver to continue operating, then you start looking at China in that light, India in that light, and also America in that light.
Yeah.
So China has a lot of companies, especially with the investments they have made in the EV industry, with their top 2 EV companies surpassing Tesla in their production. Yeah, there was BYD, and now there is it NIO?
Yeah.
Yeah. So this expansion into EVs and trying to dominate, especially Europe, trying to export their cars to Europe, is basically creating more demand for rare earth metals, more demand for silver, more demand for copper, more demand for lithium, and many other metals.
Yeah.
So as a result, if you look at the commodities performance, it's not just gold and silver that are moving up. You look at palladium is up. You look at copper, aluminium, iron ore, all are moving higher. So these countries are trying to engage into an economic warfare where when you control the, let's say, rare earth metals, then you have the final say.
Okay.
Yeah. So that's why even if Trump has been trying to, let's say, harass China, implement 100% tariffs, they have not been working because China has its own hidden power in that they control these assets.
Okay.
Yeah.
So basically, following how they make the trade deals can hint on if, let's say, you are looking at gold reversing, those are some of the things you can look at it. But now, if you say long-term, definitely it looks bullish. How do you plan yourself to trade on a daily basis for any person who wants to be on a day-by-day? Because not every day will be a bullish run,
So for me, it's very simple. If it's gold that I'm trading, and we know that the long-term trend is up.
Yeah.
So I'm not looking to be entering short selling positions. I don't want to be on that side of the trade. It's a very simple question. I wake up in the morning, I check the chart of gold.
Yeah.
Is it at an all-time high? If yes, I'm not buying.
Okay.
Yeah.
Okay.
Do we have a pullback?
Yeah.
Let's say a 1 day, 2 day pullback. Now I'm preparing to buy.
Okay.
Do we have some form of consolidation? Like sideways momentum.
Yeah.
Where gold can be choppy sometimes.
Yeah.
Maybe 2-3 days choppy, and then that eventual kick.
Yeah.
We call it the devil's candlestick.
Yeah.
It tells you you're going down, and then eventually, an hour later, it's moving
You
up.
provide liquidity to the market, eh?
Yes. So once I see that liquidity grab,
Yeah.
then I'm riding the gold all the way up.
Okay.
Yeah.
Now, let's come back to Kenya a bit.
Yeah.
A lot has been happening just today on the 22nd of January.
Yeah.
There's a new bank looking to buy NCBA. This is after Standard Bank tried to buy NCBA. We have yesterday, or rather Monday, the initial public offering for Kenya Pipeline is out. NSE is already quite active. If I looked at the charts today or the markets today, the bids and everything is quite active. Are we looking at another potential year of, local markets, being quite active? And given people are divesting, I'd say from US, or rather not divesting, but rather cooling down, is Kenya looking like a good capital markets, you'd say?
Well, it's looking very, I would say, attractive.
Yeah.
I would say it was more attractive right after we had the worst performing stock market on earth. That was 2023.
Yes.
Yeah. So I believe for any value investor, that was when it was most attractive.
Okay. Right
because
now,
the valuations were really low.
Yeah, I'm saying that because people have been saying Kenya Pipeline is overvalued. People have different variations of it. But then again, there's a chance that once it IPOs, given how last year the market performed, the momentum might push it even higher. Of course, this is just momentum driven and maybe news driven. And then when things stabilize, everyone is done excited and everything, it corrects itself. I don't know. From a trader's perspective, I'm going in with greed. From an investment perspective, definitely not matching it. But the company itself is valuable given the infrastructure they have, the contracts they have across Africa. So cash flow revenue, I believe it would only improve over time. What do you think about that?
Well, I think it's a nice opportunity, especially now that they are democratizing access. That now you'll be able to even buy like one share from the app, from the M-Pesa app. So I expect there to be more participation. And one of the top tickers will be the newest IPO, the newest girl in town.
Everyone going for it.
Most likely attract some form of liquidity.
I think over the last, I'm sure you have gotten a lot of requests. How do I get started? How do I go about this? And I'm like, last year when I was telling you to get your CDSC account, that is when you should have gotten. So I guess maybe perhaps the regulators should find a way to ensure that the process of opening an account is as simple as opening a trading account, let's say with FXPesa. They should look into that because I would say the success or failure of this IPO lies on how easy it will be to open an account within the next 30 days. So that you can see, okay, how much did they raise? And then that will determine how obviously it performs over time. Now, within the banking sector, I know Dominic has mentioned something earlier regarding we having less banks and stuff like that. Do you think entrance of our foreign bank would have an impact or an influence on how our local financial markets operates this year, given if our local FOMC has cut rates like 10 times so far?
Well, the way I would think about it is if you have a small number of banks in the country and they have, let's say, this liquidity pool, the amount of money available at their disposal. So this includes their investments, the deposits from their clients. And now you start looking at how they spend this money. Some of this money ends up in government bonds. Some of it ends up in the economy as loans. Right? So if you add more foreign participants in the market, what will change?
I would say
because the foreign bank doesn't come with deposits.
It comes with the foreign cash.
It's still looking for the same deposits that all these other banks were looking for. So they are competing for the same pool of money.
Well, two things I see here. Number one, of course, Kenya shilling USD exchange rate would improve, or rather go down from 128. Perhaps we might go even lower. And number two, I would say they would need to undercut the current participant, maybe offer, the same way I&M did, no transaction fees, or offer.
Now you're speaking. So a foreign bank coming to Kenya basically brings in better products, more competition. I believe most of the apps that we had in Kenya, especially for mobile banking, were collapsing, especially during holidays. You try to withdraw some cash around Christmas. Some of the banks, I won't name them, would collapse and you would not be able to access your money.
Yeah.
Back raise exists. AMSA comes in, they build a really good app. People flock to that app, and then these other ones started improving their apps.
Yeah.
So I believe when we get a new entrant into the market, since they are chasing after the same clients, they will have to improve their services. And that's the benefit of the average Kenyan.
Okay.
Yeah.
So it basically, the more participants, I would say the better it is for the consumer. Why not just enter, come on your own and build up? Because I think it's not just NCBA which is getting acquired. Paramount Bank is getting acquired by Zenith Bank from Nigeria. Wouldn't it be better if perhaps they just come in and set up base?
Well, there's the issue of resources. Like setting up from zero
can be quite costly.
Can take you way far back. Okay. Especially if you look at the banking halls. Most of them are either leased or fully owned. If it's leased, you'd have to renegotiate the lease, which would probably move higher. Branding, you have to now sell the brand. You have already found a brand that is known. People know this bank, they trust this bank. If you look at from the investing side, the biggest or the top performing sector in the entire NSE has been the banking sector over the last 20 years. So they know that there is money in this industry. So they just want to take a small piece. But at the same time, in order to get that piece, they have to improve the services.
I think that it will be an interesting year. Somebody was saying Nedbank entering the Kenyan market, given it is listed in the Johannesburg Stock Exchange, it will expose you a bit to how the market. So if you buy shares of NCBA, because it will still be publicly listed, if you buy shares of the new entity that has been acquired, how they perform back home, they can definitely have an impact on how they perform in Kenya. So you'll be sort of like a cross shareholder and benefiting from however they perform at their home base.
I believe last year you were talking about JP Morgan Chase. Setting shop in Kenya.
Explorational.
Of course, they will be looking at areas to direct the investment.
Okay. Well, it sets up an interesting year, at least in the financial market. What about the Kenya Pipeline IPO?
I don't know. You don't have to convince me that Bitcoin is not going to perform this year.
We'll come to crypto.
No. It's a decision. It's like capital is not just lying around, right? Anyone who considers themselves an investor, they don't just hold capital idly like Warren Buffett. You're most likely skipping from one vehicle to another. You move capital from this, let's say, sure, steady vehicle moving a bit slow, another one that is moving faster. So I don't know. Okay, I'm positive about it. I'm not yet convinced.
Okay. That is not the first IPO that will, at least they have issued their memoranda to investors. Family Bank is also coming up later on in the year. So that should make up for an interesting, and I think there'll be another state corporations which will basically, the government will divest before they get in. Finally, to the one topic that you were talking about, crypto. Bitcoin, I think, went up around on Monday, 99,000 back to below 90K. Are you looking at Bitcoin price stabilizing and having steady, I would say, growth or price action? Or maybe it is now more or less sort of, I don't want to say a substitute, but a mirror of how Nasdaq performs?
If, for instance, we saw what happened on Monday. So over the weekend, Trump has been screaming through everywhere, through the windows, doors, everywhere, that these guys must pay tariffs, implementing 10%. By 1st of February, we're giving them 25% tariffs. And then the market reacts. Everyone dumps the Nasdaq, SP 500, Dow Jones. Guess what? Even Bitcoin dumps. Goes all the way down from 97K to 87K. That was 10K drop within a week. Then fast forward, he changes his mind. Nasdaq starts going up, Bitcoin starts going up. So this marriage, I don't understand why the correlation still exists when the two assets are too different.
Is it because of maybe institutional investors hedging one for the other?
Well, Bitcoin moves based on liquidity, global liquidity.
Okay.
So when global liquidity is on the rise, means that there's more dollars in the market, then the price of Bitcoin tends to go up.
Okay.
The opposite is also true. When there's less liquidity, then price of Bitcoin tends to go down.
So will you, let's say this year you are trading Bitcoin.
Yeah.
Can how Nasdaq performs be a signal to what you expect on the price of Bitcoin?
Definitely.
Okay.
Definitely. Yeah.
Okay. And
so whenever there's new money in the market,
Yeah.
All this money finds itself into some form of investment.
Yeah.
So when people are risk on and Bitcoin has become more like a speculative asset, they tend to go for assets that they believe will perform better towards the end of the year.
Okay.
So some of the industries we have seen performing really well. During COVID, it was the vaccine companies.
Yeah.
And of course, companies like Zoom. So fast forward, we got into the era of AI. So I think this is the third year, the fourth year now of AI companies dominating the markets.
Okay.
Ranging from microchips, data infrastructure. So companies that are in the microchips, like NVIDIA, are doing really well. Applied Materials. Then we got into the Palantirs.
Yeah.
We got into what else? The big techs also did well. Google,
the cloud services, Amazon,
yeah.
Google itself,
Yeah.
which is the other one, Oracle.
Yeah.
Oracle did really well.
Yeah.
Okay.
So Meta, all these companies had been doing well. So towards the end of last year, one of the best performing companies was SanDisk.
Yeah.
Because of the shortage of
memory. Yeah.
Yeah.
Okay.
So looking at this year and what Trump is really pushing for, like getting the US self-reliance in semiconductors.
Yeah.
This is bound to expand the AI trade.
Okay.
So if tech is leading, then we should be seeing more performance in Bitcoin.
Okay.
Yeah.
Now, finally, do you think you'll invade Greenland?
No, definitely no.
Why?
I think what he was looking is concessions.
Yeah.
The EU saw this could be a protracted war with Trump, and they don't like that. Mainly because the individual economies are not doing really well, particularly well.
Okay.
So they don't want to get into one more fight when they haven't solved their current problems. So, for instance, you saw what happened with the budget in the UK. They are still struggling with raising taxes. So now, if they have to send some soldiers in Greenland and they're not even done with Ukraine, that would overstretch them. So what we'll most likely see is some form of concession with Greenland, deciding to work with the US, maybe allow them to have a military base, maybe something along American companies investing in their rare earth minerals.
Okay.
Yeah.
Okay.
So I think Trump is a capitalist, and it all ends up in deals.
What about these today tariff, tomorrow war? Don't you think at some point the market will basically now, how do I put it, ignore him? Or even the political leaders, like the way India's prime minister, he basically said, okay, we are done with you do what you want, we'll take the tariffs and we'll see how we proceed from there. And then after a while, they were reduced. Don't you think some countries will start basically ignoring his tantrums, given he basically shares, a private message, he will share it online and sort of to embarrass your gotcha moment. And therefore, there will be limited communication and therefore limited consensus on what to expect on how the market will react, or even investors, what they will do in the future. Don't you think at some point it will start eating itself, to put it lightly?
On one hand, there are some things where, he will just post and say, thank you for your attention on this matter.
Okay.
And then there's him coming for you as a president and grabbing you from your house.
Yeah.
So on one side, if you are, let's say, looking at Trump pushing you to implement something, or he slaps you with tariffs, those tariffs haven't been as much effective.
Okay.
So an analysis that was done, I believe, in the month of December, showed that a lot of countries were not impacted by tariffs. It was the Americans that were impacted more.
Okay.
So an example would be a company like Nissan. Toyota. So Toyota Japan was faced with very high tariffs because Trump implemented tariffs on all cars, right?
Yeah.
So they kept expanding their sales to other nations. They had a better than expected performance.
Yeah.
So despite getting tariffs from the US, Americans still continued buying Toyota, though not at the same rate as before the tariffs.
Okay.
But they were able to diversify their products and meet their, let's say, targets and demand. So a lot of companies are doing the same thing. So if you're facing tariffs from the US, if they reduce their purchases from your company, you look for other markets. And that's what a lot of companies have been doing.
Okay.
Yeah.
So it basically, because we have seen what Canada has done recently, trying to negotiate with China, and perhaps there'll be more Chinese vehicles in the North American side.
Yeah.
So diversification, basically, yeah?
Yes.
All right. Maybe as we come to a close, what are some of the things you'll be looking for? What is one thing you are looking at in the next, month?
Yeah.
Or on a weekly basis, what is that one thing you check out that allows you to trade or invest well?
Well, on one side, there's tomorrow, the BOJ. I think that's a big thing.
Yes.
The Bank of Japan interest rate decision and the outlook for the year will be very important. It's their first meeting of the year.
Yes.
So that will set a tone, showing us whether they'll be going ahead with a rate hike to 1%.
Yeah.
We know that the PM tried to implement a tax that will reduce tax on food to 0%.
Yeah.
That would hit their budget and their ability to honor their bond payments.
Yeah.
So that outlook will be very important because if they decide to go ahead and hike interest rates, that could cause like a lot of chaos in the markets.
Okay.
So on this other side of the America trade, I believe the cycle continues same as last year.
Okay.
So what I'm looking forward to is the taco trade. Trump always chickens out. So anytime he's aggressive about something and there's panic, I want to buy that dip. Like that is not something I'm going to miss.
Okay.
Yeah.
All right. Thank you very much. Today's episode was a bit laid back, not explosive as expected, but I hope you learned one or two things. Of course, don't forget to put in your questions or commentaries below below the video on YouTube. And if you are there in the last event, something good is coming, and we have some exciting guests coming up. Bullish Banter this year will be doing it a bit different, so hopefully you are enjoying and learning one or two. Until next time, I've been your host, Jesse. Adios.
Adios.
Oh, for those who don't have a trading account with FXPesa, click on the link below, create your account, make sure to join Rufus and Robert's masterclass sessions. At least you can learn something. And of course, when you do your first deposit, you will qualify for a 100% deposit bonus.